Today, I want to talk about a story that sounds almost unbelievable when you first hear it. Iran has reportedly launched or at least proposed a digital maritime insurance platform for ships moving through the Strait of Hormuz. And according to multiple reports, the policies could be settled in Bitcoin or other crypto payments. Now, on the surface, that sounds like one of those strange crypto headlines that flashes across your feed. Everybody reacts to it for about 10 minutes and then the market moves on. But I actually think this story is much bigger than that, because this might give us a real glimpse into how crypto adoption happens. Not through everybody suddenly buying coffee with Bitcoin, not through every shop in your local town accepting XRP or Ethereum, but through the parts of the global financial system that most normal people never see. Before we get into it, welcome back to the channel. If you're new here, my name's Paula. And on this channel, we talk about crypto, markets, macro, regulation, and the bigger financial shifts that are happening underneath the headlines. Because I don't think crypto is just about watching green or red candles on a chart. I think it's about understanding where the world is moving, how money is changing, and why some of these stories that look small at first can actually tell us something much bigger about the future. So let's start with the actual story. Reports from The Block, Iran International, Splash 24/7, and others say Iran has launched or promoted something called Hormuz Safe. It's a maritime insurance platform for vessels moving through the Strait of Hormuz and the Persian Gulf. The claim is that the platform will provide digital insurance policies for shipping companies and cargo owners, with payments potentially settled in Bitcoin or cryptocurrency. The reports say that Iran's Ministry of Economy has been pursuing the plan since April, and that it could generate more than $10 billion in revenue through policies covering things like vessel inspection, detention, and confiscation. Now, this is really important. The bloc said it could not independently verify whether Hormuz Safe is actually operational or whether cargo owners are using it. So we have to be very careful here. We cannot treat the full platform as confirmed at scale. What we can say is this fits with a broader pattern of Iran exploring crypto-linked mechanisms around the Strait of Hormuz, and that broader pattern is where the story becomes interesting. In April, the Financial Times reported that Iran was looking at demanding crypto payments from oil tankers passing through the Strait of Hormuz, with tanker fees potentially being paid in Bitcoin, yuan, or other non-dollar currencies. Reuters also reported that maritime firm Maersk had warned shipping companies about scam messages claiming to offer safe transit through Hormuz in exchange for crypto payments like Bitcoin or Tether. And Reuters made clear those specific messages were believed to be fraudulent rather than official. So already before this Hormuz Safe story, crypto had started entering the conversation around shipping, sanction, choke points, and safe passage. And I want you to pause on that for a second, because this is not the version of crypto adoption that most people were sold in the last cycle. Most people were told adoption would look like this. Your local coffee shop accepts Bitcoin. Your supermarket accepts Ethereum. You scan a QR code at the till and pay with crypto. And maybe some of that happens eventually. But I don't think that is where real adoption begins. I think the real adoption begins in places where the existing system is too slow, too expensive, too political, too restricted, or too fragile. This is why the Strait of Hormuz matters. This is not a random shipping route. It's one of the most important energy choke points in the world. When oil and gas move through that region, global markets pay attention. When that route becomes unstable, it affects oil prices, shipping costs, inflation expectations, insurance markets, central banks, and ultimately ordinary people paying for fuel, food, and goods. The average person might never think about maritime insurance, but if shipping costs rise, if energy prices rise, if inflation stays higher for longer, they feel it in real life. This is where the adoption story gets very different from the retail crypto story. Retail tends to think about crypto in terms of price. Is Bitcoin going up? Is XRP going up? Is Ethereum outperforming? Are altcoins dead? Are we in a bull market or a bear market? But governments, institutions, shipping firms, insurers, and payment networks are looking at a different question. They're asking, how do we move value when the normal rails are blocked? How do we settle payments when trust is broken? How do we create financial infrastructure when the existing system is controlled by the other side? And this is why a story like this is so important. Whether Hormuz Safe becomes a major operational platform or whether it turns out to be more of a proposal, the fact that this conversation is even happening tells us something. It tells us crypto is no longer just sitting in the corner of the internet as a speculative asset class. It's being pulled into the world of trade, sanctions, energy, shipping, insurance, and geopolitical power. Now, we have to be balanced here because this is not automatically a clean, positive story. There are major legal, political, and ethical complications. Iran is under heavy sanctions. The Strait of Hormuz is already a flashpoint. The US and Western allies are deeply concerned about freedom of navigation. The Guardian recently reported that Oman has been caught between Iran and Western powers after Iran claimed it was working with Oman on new control measures over the strait, including possible tolls on commercial shipping. That reporting also said the US opposes Iran's toll plans and argues they could violate freedom of navigation principles. So this is not just a crypto innovation story. It's also a sanctions story, a maritime law story, and a geopolitical pressure point. But this is exactly why it matters. Because technology adoption often does not begin in neat, comfortable places. It often begins in pressure points. It begins where the old system doesn't work well enough anymore. And right now, the global financial system has pressure points everywhere. Sanctions are more common, trade is more fragmented, countries are talking about de-dollarization, stablecoins are moving huge amounts of value globally, tokenisation is being explored by banks, AI agents may eventually need payment rails. Governments are trying to regulate crypto while also quietly studying how to use the technology themselves. And in the middle of all of this, we get this strange headline about Bitcoin settled maritime insurance in the Strait of Hormuz. This is the part where I think most people underestimate what adoption really means. Adoption does not always look like excitement. Sometimes adoption looks like necessity. Sometimes people do not adopt a technology because they love it. They adopt it because the alternative is worse. They adopt it because the banking system is too slow. They adopt it because they cannot access dollars easily. They adopt it because their currency is unstable. They adopt it because their trade routes are restricted. They adopt it because insurance is expensive or politically complicated. They adopt it because in a crisis, neutral settlement rails suddenly become useful. And that word neutral is key, especially when we talk about Bitcoin. Bitcoin doesn't ask who you are. It doesn't ask which country you're from. It doesn't ask whether your government is popular or unpopular. It just settles transactions according to the rules of the network. Now, this is exactly what makes Bitcoin powerful, but it's also what makes it controversial. Because the same neutrality that makes Bitcoin attractive to ordinary people in unstable economies can also make it attractive to sanctioned regimes, black markets, and actors trying to move around the traditional financial system. This is why regulators are going to take stories like this very seriously. If Bitcoin and stablecoins start being used not just for speculation, but for shipping, energy, insurance, and sanctions workarounds, governments will not ignore that. They will push harder on exchanges, they will push harder on KYC, they'll push harder on stablecoin issuers, they'll push harder on blockchain analytics, they'll push harder on custody rules, and they may use stories like this as a justification for more control. So when people say, is this bullish for crypto? The answer is complicated. It's bullish in the sense that it shows real-world utility. It proves the technology has a purpose beyond meme coins and leverage trading. But it's also potentially bearish or at least challenging from a regulatory perspective. Because the more crypto becomes useful in geopolitics, the more governments will want to control the access points. And that brings us to a bigger question. Could this be part of how adoption happens? I think yes. Not necessarily because this specific platform becomes huge, but because it shows the direction of travel. Crypto adoption may happen first in the hidden layers of global finance, insurance, settlement, trade documentation, cross-border payments, stablecoin liquidity, tokenized collateral, AI to AI transactions, supply chain verification, digital identity, things that normal people will never see directly, but that eventually affects the products, prices, and services they use every day. Think about the internet. Most people did not adopt the internet because they understood packet switching, TPC/IP, server infrastructure, or routing protocols. They adopted it because suddenly they could send emails, shop online, watch videos, use social media, and run businesses. The complex infrastructure disappeared into the background. I think crypto could evolve in a similar way. Most people will never say, I'm using blockchain. They may simply use a payment app, a bank account, an insurance product, a tokenized investment platform, or an AI tool. And behind the scenes, some part of that system may settle on blockchain rails. This is why I keep saying retail's often looking in the wrong place. Retail's looking for the app moment. Institutions are building the plumbing. Retail wants the viral coin. Institutions want settlement efficiency. Retail wants the next 100x. Governments want control, monitoring, resilience, and alternatives. Traders want volatility. Businesses want faster payments and lower friction. And somewhere in the middle of all of that, the real adoption story is forming. And this is why the Hormuz story links to stablecoins as well. Because even if this report focuses heavily on Bitcoin, stablecoins are probably one of the biggest adoption vehicles in crypto. Tether, USDC, and other digital dollars already show that people around the world want access to dollar-like assets on crypto rails. In countries with unstable currencies, stablecoins can become a savings tool. In cross-border trade, they can become a settlement tool. In crypto markets, they are liquidity. And in the future, they could become one of the main ways money moves between humans, businesses, platforms, and AI agents. This is also why the dollar story is so interesting. People often frame crypto as anti-dollar, but stablecoins have actually extended digital dollar demand globally. So on one side, you have countries like Iran looking for non-dollar alternatives because of sanctions pressure. On the other side, you have dollar stablecoins becoming more important in global crypto liquidity. That means crypto is not simply replacing the dollar, it's creating a new battlefield where the dollar, Bitcoin, stablecoins, CBDCs, and tokenized assets all compete and overlap. Now, let's bring this back to the average person because otherwise this can sound like a story for shipping companies, oil traders, and governments. Why should somebody watching this care? Because these are stories that will tell us crypto is becoming more than a market. It's becoming part of the financial operating system. And once something becomes infrastructure, the opportunity changes. The question is no longer just which coin is pumping today. The question becomes which networks, assets, companies, and protocols are positioned to matter if finance becomes more digital, programmable, and fragmented. That does not mean everything goes up. It does not mean every crypto project succeeds. In fact, I think it means the opposite. The more serious this industry becomes, the more selective the market becomes. Projects with no real use case may struggle. Hype-driven narratives may fade faster. But assets and networks connected to settlement, liquidity, tokenization, interoperability, custody, security, compliance, and real-world finance may become more important over time. And this is why the market feels so confusing right now. One part of crypto still behaves like a casino. You have meme coins, leverage, liquidations, influencers, hype cycles, and emotional retail trading. But the other part of crypto is slowly becoming infrastructure. Banks are exploring tokenization. Governments are writing stablecoin rules. Payment firms are studying blockchain settlement. AI companies are thinking about machine-to-machine payments. Shipping and insurance stories are now touching crypto. And Bitcoin is sitting in the middle of this strange transition, still traded like a risk asset, but increasingly discussed like a geopolitical settlement tool. That transition is messy. It will not be smooth. There will be scams. There will be regulatory crackdowns. There will be overhyped projects. There will be stories that sound huge that turn out to be smaller than expected. There'll be governments using crypto in ways that make people uncomfortable. There'll be institutions using blockchain while pretending they're not really using crypto. But that's often what adoption looks like in the early stages. It's uneven, uncomfortable, and full of contradictions. And this is why I think the Strait of Hormuz story is such a powerful example, because it connects so many things at once. It connects Bitcoin with energy. It connects crypto with sanctions. It connects insurance with global trade. It connects maritime risk with digital settlement. It connects geopolitical tension with financial innovation. And it shows that crypto's real use case may not begin in the places people expected. For years, the mainstream criticism was crypto has no use case. But what if the use case was never supposed to be simple? What if the use case was not buying coffee? What if the use case was creating alternative settlement rails in a world where trust between countries is breaking down? What if the use case was tokenizing assets, automating insurance, settling payments across borders, giving people access to digital dollars, allowing AI systems to transact, and creating financial infrastructure that operates outside traditional banking hours? That's a much bigger story than price speculation. And it's also a harder story to explain, which is why retail often misses it. It's easy to understand a coin pumping 40%. It's harder to understand maritime insurance. It's easy to understand a celebrity launching a token. It's harder to understand sanctions pressures and settlement rails. But markets do not only reward what's easy to understand. Sometimes the biggest shifts happen quietly first in boring infrastructure before the public ever notices. So when I look at this story, I do not see it as Iran launches Bitcoin insurance, therefore Bitcoin goes up. That's too simplistic. What I see is another signal that the world is experimenting with new financial rails. And when enough experiments happen at the same time, they start to form a pattern. And this brings us back to the question in the title. Is this how adoption happens? I think yes, partly. Not because one Iranian insurance platform changes everything overnight, but because adoption often happens when technology solves a problem that the old system cannot cleanly solve anymore. And right now, the old system has a lot of problems. It's slow, it's fragmented, it's political, it's expensive, it's closed off to too many people. And in moments of crisis, people look for alternatives. Now, that does not mean crypto becomes the entire system. It means crypto becomes one of the rails underneath the new system. Sometimes visible, sometimes invisible, sometimes welcomed, sometimes resisted. Sometimes used by institutions, sometimes used by ordinary people, sometimes used by governments that other governments do not like. That is messy, but it's real. And I think this is where retail needs to level up, because if we only watch crypto through the lens of price, we miss the bigger transformation. We miss why the governments are writing rules. We miss why banks are testing tokenisation. We miss why stablecoins matter. Now, I don't want anyone to walk away from this thinking it's financial advice, because it's absolutely not. This is about understanding the bigger picture. Markets can still fall. Bitcoin can still be volatile. Crypto can still be risky. Regulation can still change everything. But I do think stories like this remind us that crypto is not dead, and it's not just a casino. It's becoming a battleground for the future of money, payments, settlement, and power. And if you're sitting there feeling like everyone else understands this space and you don't, please know this. Most people are confused because the industry is confusing. You're not behind. The story is just bigger than the way it gets presented online. This is exactly why I try and break these stories down on this channel, because the more you understand the connections, the less emotional the market becomes. And this is also why we built the Crypto Wolf Pack, because so many normal people feel alone in this market. They see traders online, they see complicated charts, they see headlines flying everywhere, and it can feel like everyone else knows something they don't. But you don't have to figure this out on your own. Inside the Crypto Wolf Pack, we look at charts, macro events, wider news, signals, and strategy together. And if you want to know the exact strategies we use to make money in both the bull market and the bear market, we've made a completely free course for you. It's called the Crypto Liftoff course, and the link is in the description. So to bring this all together, the Iran and Hormuz story is not just about Bitcoin insurance. It's about what happens when global trade, sanctions, energy, shipping, and digital settlements start colliding. It's about the world looking for new financial rails. And it's about the difference between retail speculation and real infrastructure. And it's about the uncomfortable truth that crypto adoption may not arrive as a clean, friendly mainstream moment. It may arrive through pressure, necessity, crisis, and competition. So let me know what you think. Is this the kind of adoption people have been waiting for? Or is it a warning sign that crypto is about to become even more heavily controlled? Drop your thoughts in the comments because I think this one is going to divide people. If you found this useful, please hit the like button, subscribe to the channel and turn on the notifications so you don't miss the next video. We're going to keep following these stories properly, not just the headlines but the deeper connections underneath them. Thank you so much for watching and I'll see you in the next one.